If you want to own electric vehicle stocks for the long term, Tesla is far from the only company you should consider, and Tesla is far from the only company that is poised to experience serious growth over the coming decade. What's up, ladies and gentlemen? Welcome to the Beat of Business with me, Ravi Wadan, and in this video, we're going to be covering 4 EV automakers, not named Tesla, that are extremely well positioned for long-term growth. Now, when we think of electric vehicles, the first name or company that we think of is Tesla. They are synonymous with electric vehicles, and rightfully so, because they have spearheaded the EV revolution with their awesome cars, their awesome charging infrastructure, and their amazing foresight. Tesla has become one of the most widely recognized brands in the world, and the ironic thing is they do not have a marketing budget. They let their products do the talking. Honestly, Elon Musk is the best marketer in the world. His Twitter feed alone has proved to be more effective than any marketing campaign could ever be. But the truth is that the biggest threat to Tesla right now is competition. You see, legacy automakers and newly formed automakers are extremely well positioned to grab a big chunk of electric vehicle market share over the coming years. Today, almost every automaker on this planet, from legacy automakers like General Motors and Ford and Volkswagen, Jaguar, BMW, Mercedes, have all released fully electric vehicles that are extremely well positioned to take on Tesla and extremely well positioned to grab a substantial share of the EV market. And that's not to mention the newly established companies like Lucid, Rivian, Fisker, and let's not forget about the Chinese automakers like BYD and NIO that are also pushing the boundaries of engineering and product design in terms of electric vehicles. Electric vehicles offer a lot of obvious benefits over internal combustion engine vehicles. Now, electric vehicles have a lower carbon footprint, they have far less components, which makes them more reliable and cheaper to run. They don't consume gasoline or oil, so that's a plus. And generally, they have more technology embedded in them, which makes them in turn safer and feel more like a smartphone on wheels. And these days, electric vehicles are growing in popularity, and they are also benefiting from supportive governmental policies around the world, which are intended to increase their adoption rates over the coming years. And as much hype as there is around electric vehicles, they still make up less than 5% of overall US vehicle sales, so there is plenty of opportunity and room for growth here in the United States and across the world. Anyways, let's jump into the video and talk about 4 EV stocks that you should strongly consider owning that are not named Tesla. But before we jump into the video, if you could smash that thumbs up button below, and please consider subscribing to my YouTube channel, because I make multiple videos like this a week that are intended to increase your knowledge and help you out financially. The first stock on my list is Rivian. Now, Rivian is an American electric vehicle automaker and automotive technology company that was founded in 2009. Rivian went public on November 10th, 2021, and the stock price immediately shot up over the first few days in trading. But since then, its stock price has come down to IPO levels as the hype around the company has sort of dwindled off. Today, Rivian trades at around $97 a share and has a market cap of $87.77 billion. Now, for context, Rivian's current market cap of $87.77 billion is higher than the market cap of Ford and General Motors. A little side note here, it's just crazy to me that a company as young as Rivian has a market cap that's higher than Ford and GM, both companies that have been selling cars for over 100 years. And Rivian has a lot to celebrate this year. They were the first US-based automaker to bring an all-electric pickup truck to the market in the R1T, and that truck has been getting rave reviews from automotive journalists around the world and was recently named Motor Trend's Truck of the Year for 2022. Some key highlights of the company include 71,000 net pre-orders for the R1 pickup truck, a 100,000 unit EDV initial order from Amazon, and for those of you that don't know what the EDV is, it's Rivian's all-electric delivery van, which Amazon plans to adopt and plans to use for its deliveries over the coming years. Rivian plans to increase its production capacity to 200,000 units and 400,000 units across 2 of its factories in Illinois and Georgia, and it currently has 3 vehicles for sale. 2 of them we've covered with the R1T and the EDV, with their R1S, which is their sport utility vehicles, and those deliveries are expected to start this week. Over the past couple of weeks, Rivian has concerned investors with their production capacity and production constraints, and that has been reflected in its stock price. Now, I fully expect these issues to be resolved, and I continue to see Rivian being in demand by consumers across the country. It's always interesting to see what analysts have to say, and of the 13 analysts covering Rivian stock right now, there is an average price target of $133.92, which is well above its current price of $96.65. The fact is that Rivian is an electric vehicle that people will want and people will desire, much like a Tesla. And I think and firmly believe that Rivian is a long-term EV stock that you should strongly consider holding in your portfolio. The second stock on my list is Lucid Group. Now, Lucid is another electric vehicle manufacturer based out of the United States, and they are really making their mark in the automotive industry. Lucid is headed by its CEO, Peter Rawlinson, who ironically was Tesla's VP of engineering at one point. So if anyone knows the ins and outs of Tesla, and if anyone knows how to strategically build a company to compete with Tesla, it's Peter Rawlinson. And like Rivian, automotive journalists are really raving about Lucid. Now, Lucid's flagship product, the Lucid Air, actually won the prestigious award of Motor Trend's Car of the Year for 2022. Additionally, customer reservations for Lucid's products rose to 13,000 in Q3, reflecting an order book of $1.3 billion. And since the end of Q3, Lucid has announced that its total reservations have grown beyond 17,000 units, and that number was announced on November 15th, so I can only imagine that that number has grown over the past month. At this point, the company has one product, the Lucid Air, which comes in 6 different trim variants, whose range exceeds 450 miles on a single charge, with the Dream Edition R achieving a range of 520 miles on a single charge. As of right now, Lucid's products are high-end products. Now, the Lucid Air is intended to compete with the Tesla Model S, but it's also intended to compete with high-end sedans like the Mercedes-Benz S-Class and the BMW 7 Series, but the company has announced that they plan to launch lower-priced models for the mass market over the coming years. The company also intends to launch a luxury SUV, which it aims to start producing in 2023, and if you want a sneak peek at it, here it is. This is what it looks like. It's called Project Gravity, and like the Lucid Air, it should offer world-class materials and world-class fit and finish, as well as a range that is comparable to the Lucid Air. You can join the waitlist today, but don't expect delivery until mid-2023. Today, Lucid is trading at around $37 a share, and year-to-date, the stock is up 279%. But in recent weeks, the stock has taken a bit of a fall due to an SEC probe that was announced in early December. So if you are bullish on Lucid over the long term, like I am, now may be a good time to start your position in the company, because I strongly believe that over the long term, this company is really well positioned to become a formidable player in the EV industry. The next 2 stocks on my list are legacy automakers that are extremely well positioned to dominate the EV space in the future. Now, both of these companies have done a great job pivoting from traditional internal combustion engine manufacturers to EV manufacturers. The third stock on my list is Volkswagen. Now, when I say Volkswagen, I'm not just talking about Volkswagen, the brand. I'm talking about Volkswagen, the conglomerate. Now, many people watching may know this, but many of you may not. Now, Volkswagen is the parent company of Audi, Porsche, Lamborghini, Bentley, and many more automotive brands. And the beauty about Volkswagen is that they share their architecture across the different brands. And if you've ever had a chance to research Volkswagen's EV strategy, it is truly incredible. I mean, they already have a solid EV lineup as it stands today, but their future is as bright as any company on the planet. Volkswagen plans to invest 35 billion euros in electric mobility over the coming years, and it aims to increase EV sales to 20% of its total sales by mid-decade. And by 2030, Volkswagen plans for 60% of its European sales to be electric and plans for 50% of its global sales to be electric. Put that in context, Tesla delivered approximately 630,000 vehicles through the first 3 quarters of 2021, and according to Volkswagen's Q3 filings, Through the first 3 quarters of 2021, Volkswagen delivered roughly 293,000 fully electric vehicles. Ladies and gentlemen, Volkswagen is catching up to Tesla, and they are catching up fast in terms of total EV deliveries. There are actually a couple of other reasons that I personally really like Volkswagen stock, and I don't think that it is really talked about enough in mainstream media. Now, I understand that Volkswagen isn't a pure play EV company like Tesla, Rivian, or Lucid, but if you were to value Volkswagen's EV business, it is really undervalued when you compare it to companies like Tesla, Rivian, or Lucid. And the fact of the matter is that Volkswagen could easily be the largest EV manufacturer by the end of the decade. And at today's valuation, I think Volkswagen is a great long-term play. Another reason that I personally love Volkswagen is because of their brand recognition across their brands and their ability to package essentially the same product under different vehicle brands. Now, if you take a look at the Porsche Taycan and the Audi e-tron, they're essentially the same vehicle, and I give them credit because they do enough to differentiate the two products, but at their core, they are the same vehicle. And this actually is going to be a huge strength for the Volkswagen Group going forward. They will be able to use a couple of platforms and essentially build multiple products across multiple brands that consumers will want and consumers will desire. In terms of being a legacy automaker, I'd argue that Volkswagen is doing the best job of pivoting into an EV company. I think Ford and GM are also doing a great job as well, but I think Volkswagen takes the top spot in terms of their transformation. Year to date, Volkswagen is up around 45%, and today it's trading at around $29 a share with a market cap of 112.51 billion euros. And again, if you're a long-term investor like I am, I would strongly consider adding Volkswagen to your portfolio. The fourth stock on my list is Ford. Now, many of you don't think of Ford as an EV stock, but believe me, Ford is transforming into an electric vehicle manufacturer right before our eyes. Ford sold 11,116 electric vehicles in November. Now, that doesn't seem like a huge number because it's not, but it's actually a year-over-year increase of 154%. The Ford Mustang Mach-E SUV sales have been slower than anticipated since its release, but they are really starting to pick up right now, and Ford is releasing its F-150 Lightning, which already has unbelievable demand. In fact, reservations for the F-150 Lightning truck have grown to a whopping 200,000 units, and its hybrid pickup truck, the Ford Maverick, which will be introduced in 2022, has received over 100,000 reservations, and that's the latest number that I was able to find, which was from November, so I can only imagine that that number has gone up significantly. As it stands right now, Ford's electric vehicle market share stands at roughly 7%, but analysts and myself estimate that its electric vehicle market share will double by this time next year as these highly anticipated products start to roll out. And Ford just started building and delivering its Mustang Mach-E in China, and that's a big deal when we consider China's total addressable market. And I forgot to mention that Ford has an all-electric delivery van scheduled to go on sale next year, which will also boost its EV market share and its EV sales. Year to date, Ford is up over 130% and currently has a market cap of $78.37 billion. Now, even though the stock has done extremely well year to date, I think that Ford is a company that you should consider owning in your portfolio over the long term. Ford, like Volkswagen, is doing a great job of transitioning itself from a legacy automaker to an EV automaker. And if you ask me, they are doing as good as a job as anyone in terms of developing products that people want and investing in the underlying technology to develop high quality electric vehicles. All right, ladies and gentlemen, thank you all for watching this video, and I hope that you guys got some valuable insights and some valuable information that you may not have had before. I have to admit that it was hard for me to leave GM off of this list because it's also one of my favorite EV plays, and it would be an honorable mention if I had one. I think GM has a lot going for it in terms of its new Hummer EV and its Ultium platform. I already did a video on General Motors a couple of months ago, and if you want to go check it out, I go over some of the reasons that I think you should own that stock for the long term. Now, there is a lot going on in this space right now, and there will continue to be a lot going on in this space in the near and long-term future. But I would love to get some of your guys' feedback. Which stocks do you think are the best long-term EV auto manufacturers to own over the long term? that are not named Tesla. And as always, please remember to do your own research and your own due diligence. This video is intended to be a part of that research and due diligence. With that, I'm going to call it a video. Thank you all for watching. I'll see you all next time.